Kangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Nadine Blaney. My guest host in studio today is Martin Crabb, CIO of Shaw & Partners. Let me set the scene for you. If you were just with us, you were listening to Reserve Bank Governor Michelle Bullock speak against the RBA's shock, some say, move to hold rates at consistent levels from the previous month. Let's take a listen to what Warren Hogan, who is from Judo Bank, had to say.
I think this is a pretty important wake-up call for commentators in the markets that shouldn't be thinking about a lot of rate cuts unless you've got some particular view that the economy is about to take a nosedive, which I think is not a very sensible way to think about it. So I think we're getting the message here is rates are near where they want them to be, and we've got to look for the next big move in the cycle to think about what the next big shift in Australia's interest rate structure will be.
Immediately following the RBA's surprise decision to leave rates at 3.85%, we did check in with David Flanagan from Curve Securities to find out exactly what got markets a little too excited.
And I think what happened was when the inflation number came out, the monthly inflation number, the most recent number, it got everyone a little bit excited that we are now looking at undershooting rather than the midpoint. But we know that there's not a full suite of data in those monthly inflation reads till the third read, which comes out at the same time as the quarterly. So clearly the RBA is stating here, we want to see exactly where inflation is before we make another decision.
And we also spoke with Sam Fenner from Westpac, who said that the biggest tension for the RBA going forward, in her view, was the labour market.
It's still going to show that inflation, we're already in target. It's still going to show that inflation is moving downwards. I suppose the biggest sort of tension for the RBA remains the labour market. The fact that, it's still quite strong, which actually they pointed out too, and that labour productivity is still quite weak. So I suppose it's still that concern about the stickiness of inflation remaining the upper band of the target.
And you just heard Michelle Bullock, the Reserve Bank Governor, talk about inflation, also saying that it's not as if the RBA is keeping rates high so that they've got powder dry. She was just reiterating the fact that interest rates are at a level that would allow them to cut in the future if necessary, given the uncertainty across the global environment. Let's get a view from my guest host in studio here, Martin Crabb. Welcome. Wow, what a surprise.
Yeah, a shock hold. Mm-hmm. Would have thought doing
those
nothing
would
words.
Be
shocking.
Yeah, those two words together don't usually come.
Yeah, it's interesting because the whole makeover of the Reserve Bank, changing the meeting schedules, doing the press conferences, having more minutes, now saying how many people voted for and against. They're all designed to keep the market better informed, because if you go back a couple of years ago, they kept doing things that people didn't think they would do. And everyone said, well, look at the FOMC. They've got big minutes, lots of testimony, lots of press releases, lots of questions, and the market kind of understands their thinking, whereas in Australia, we've got no idea what these people are doing. We seem to have gone back to that era of going, everyone's going, what the heck?
Well, it was interesting. Michelle Bullock, in my view, got a little bit feisty there in that media conference when she was asked if communication is gone wrong, essentially, at the RBA. And she said, no, no, not at all. She said that market participants, those in the financial, ecosystem, they can look at whatever they want to look at. They publish their statement of monetary policy, and that's what they're basing their decisions on.
Yeah, and look, the true economists out there. So most investment banks have an economist, they have a rate strategist, they have an equity strategist. They've got different people, and the ones that are more economically focused, we're all saying they're going to wait for the June quarter CPI.
I will say our two guests in studio, David and Sean, also said, hey, look, this is not a slam dunk. This is not a shoe-in.
Well, the NAB only moved to July a couple of weeks ago. UBS only moved to July a couple of weeks ago because the market was screaming at them that they were wrong. And I think you get under a lot of pressure as an economist. If you've got a forecast and the market's saying 99% you're wrong, you kind of fold. And that's sort of what happened. So that's exactly what the Reserve Bank did. They said, we're going to wait, and we just don't trust the monthly data. We're seeing some mixed signals in the economy. Why don't we just wait a few weeks? That was kind of the narrative.
It is,
right? Yeah. There's an August meeting. So
when you look at the data, because you too form an opinion on the state of the Australian economy. Last week we were talking about Australian exceptionalism, but the consumer is weak. So in your view, sitting where you sit, knowing what you know, Is this sound
Yeah,
decision-making?
I'd be one of the three people that would have voted for a cut, and that comes down to the starting point is monetary policy restrictive or accommodative? And the language of their monetary decision today was the risk is to the downside. This trade war could be ugly. It's going to knock business, intentions around and consumption intentions around, and so we need to be ready to cut rates. She said in the conference that the direction is still down. So they've said themselves that rates are restrictive, and I'm going, well, okay, if you're not sure about the outlook, and monetary policy settings are pretty close to where they should be. You've got inflation in the band, you've got unemployment in the band, or where you think it should be. You shouldn't be restrictive, you should be neutral. And neutral is low threes, high twos, according to them as well.
Well, or has our view of where neutral sits
it's gone back up again.
Yeah, in the wake of this whole...
Well, their statement of monetary policy, they produced a chart that have a whole bunch of different models, because it's a theoretical construct, Nadine. It's not like there is a neutral rate. It's like it's where equilibrium is, and that's subject to interpretation. But there's a bunch of academic studies that come up with models, and they published the midpoint of that, and it looked like it was just below 3. I think PIMCO thought it was 2.75 was the new neutral. So 3.85 is a long way from 2.75. It's four and a bit cuts away. So I thought today was a bit of a misstep. I think they should have gone. Their powder's still dry, even at 3.6. Their powder's still dry. It's not any drier at 385. And I think the risk is that the little bump in optimism that we've had from consumers, and that was in the NAB survey today, was based on, hey, rates are coming down. This is good, so I can be a bit more optimistic. So there's this kind of, circuitous argument that if optimism, wasn't up, they would have cut rates.
Yeah, well, chatter in the newsroom, of course, by anybody who has a mortgage was, I thought it was going to go down a bit. Yeah. All right, so what to do then? We've had markets at record heights. They're not at record heights yet, but you still do get a sense that there's a bit of FOMO out there.
Yeah, there is, but there's also, I suppose, a view that we've probably got a little bit too complacent or a little bit too optimistic about what
Trade,
Donald Trump's doing. Yeah, so I think this first kickoff of return to reciprocal tariffs has probably caught the market a little bit off guard. The fact the Reserve Bank is on hold, that takes a little bit of wind out of the sail of some of the stocks that are more domestically focused and tied into housing and consumption and maybe lower rates, so rate sensitive stocks. So you think the banks and the real estate stocks maybe pause for a bit. The cyclicals are going to respond to what's happening on Wall Street. So I think the market, trading at pretty rich valuations with a good macro support is fine, but some of that's just starting to fray just a little bit. This is more of a trading view than a kind of strategy view, that you wouldn't be surprised if the market trades sideways / comes down a bit, particularly heading into reporting season. So we're in sort of blackout at the moment. We're in this kind of weird sort of vortex where companies can't talk because they've got the balance state passed, but they can't talk about the numbers. So I think it's always a period of volatility. There's a lot of people on holidays. So I wouldn't be surprised if we have some volatility and maybe a few buying opportunities here and there.
All right, well, let's see. We did have some sector underperformance today, particularly coming through in the consumer staple space. Woolworths, Coles, Metcash. You're nodding. Nothing surprising here, I suppose, Martin.
No, I mean, Metcash is the one we like in that space, and that, it's off a little bit. But, above $4, that's had a pretty good run, that stock. But yeah, you'd expect that this area of the market, this sort of consumer staples and consumer discretionary stocks, maybe just have a bit of a breather on the back of that rate decision.
And I believe the A-REITs, you could probably say the same thing there. We've got Centre Group down by 2% to $3.72 today. Pretty across the board, seeing losses except for Lend-Lease. At $5.43 to end the session. Now, the materials space also being weighed upon with the big... what's happened to this notion that we're having this transition out of the banks into the miners?
Doesn't seem to be happening today, does it? I think a broad market sell-off today. There's obviously still a little bit of nervousness around China and steel production, that sort of stuff that's weighing on the miners. But today they just get caught up in the macro view. They just would have been selling of Australia right across the board today.
Yeah, and Infotech, I thought we'd put this up just so that we could see there was some buying in WiseTech Global, NextDC, and T&E Technology One. So Cochlear has received US FDA approval for 3 sound processor products. Elsewhere, Vodafone operator TPG is set to sell its fiber network infrastructure assets to Vocus. UBS has lifted a price target on computer share on yields, and Activeport Group soars on securing a network transformation contract, with Domino's Pizza also higher on UBS's upgrade to a buy. Any thoughts on that?
Yeah, it's interesting. I think the fact that self-interest is a great motivator. So Jack Cowan, the biggest shareholder in Domino's, has said, enough. I'm stepping in as executive chairman. The CEO stepped down. I'm going to rebase the cost structure. I'm going to make franchisees profitable. This stock has fallen from $160 to $16, and it's on its way back up a bit. I think they've got a $20 or maybe a $25 price target on it. So there could be a bit of a bounce in that stock, but I still think he's got a lot of work to do.
Gold Road Resources did drop today on production cut for its key mine, and UBS has backed South 32's Columbia nickel exit, but South 32 fell after Goldman Sachs cut its outlook to neutral. And then we get to the stock of the day, MinRes. We had a view coming from Jonathan Takadina from MPC Markets and Sean Hickman from Market Matters.
I think, and we feel at Market Matters that both WiseTech and Mineral Resources, much as nobody's very happy with what's happened there on the board level, they still respect and like the profile of the big CEOs or ex-CEOs that took the businesses to where they are today. So I think the Chris Ellison side of things, as the market's dismissing it, I don't think that's that important. If anything, it could be a positive.
The fact that we had some board news wasn't significant news, but the fact that Chris is going to stay on, the stock dropped. I think it was down 2% at the open, roughly, and when I looked last, it's up 1%. So I think the bottom's in on that. In that case, I wouldn't go back up the truck though. I think it is going to be a very, very volatile stock, which is good for shorter term traders like myself, which I do like to buy. So at the moment, for investors that have had it for a very long time, I just say just hold on. Fresh money, I'd dip a toe in there, and I do think it's a buy.
Jonathan Takadina there to end those thoughts on MinRes. I have to ask Martin Crabb, my guest host here in studio, about that. He says the bottom's in. He'd be buying, although warns it could be volatile.
Yeah, look, it's off the risk spectrum for us. There's so much debt on that balance sheet. So I think the corporate governance things are a little bit of a sideshow, although that's still to be resolved, whether Chris Ellison remains in the position he's in for forever. So they're trying to de-gear the balance sheet. They're trying to sell assets. Lithium is not helping them at all. So it's really about the Onslow Iron Ore project. If they can bring that on stream and start to get the cash out of that, then they can start to address the balance sheet. But you're not just buying commodity risk, you're buying corporate governance risk, and you're buying a lot of balance sheet risk. So you need to get rewarded if you're going to take that much risk. So, the stock's going to have to perform pretty well to make up for that. So for our clients, it got too risky for us a while ago, and we just sort of moved out of it and just watch it play out. So it's a little bit like Domino's. There's probably a bounce here, but do you want to be in the thing longer term? I'm not sure that you do.
Got it. So Martin, look, we finished flat, although mildly positive, I've got to say, for the S&P ASX 200. Tomorrow's another day, but tonight, is it just a tariff headline scenario when we come in tomorrow morning, likely?
I think very much so. The timing of these letters and when they go out, it's I think there's a setup. He's sent out the dozen or so that he did last night, but I think it's watch this space on US trade. That's going to be the biggest game in town. We're sort of moving away from let's watch what the next interest rate move is. I think a lot of central banks will probably do what the RBA did and just kind of watch to see what's happening. And so I think the nervousness around that is probably what's going to drive markets, and probably to the downside, I would think.
Got it. Martin Crabb, CIO, Shawn Partners, thanks for joining me. Really
Always
appreciate it. I'll run you through some aftermarket leaders and taking a look at percentage moves, of course. We've got Vault Minerals, West African Resources. You can see there's a bit of a gold thematic there going on. We have had a lot of production reports coming from these gold companies as well this week. Sandfire was on there as well with copper. HMC Capital down by 5%. Clarity, Reese as well, troubled stock, one of the worst performers of FY25. Down to $13.99, and Nuix. I was thinking about Nuix yesterday because I was being talked to yet again about, the massive amounts of data that we are creating and the sense that needs to be made out of all of that. And, Yeah, Newick's coming under pressure today. Don't know if there's any news. I was a little preoccupied with the RBA, but one to watch. In the small to mid-cap space, you can see there's definitely a resources thematic there. Unico Silver, don't see that on the list often, up by 8.5%, reflection of the price. And we've got a bit of a motley crew of names here. Tetratherics, that company that came out with much fanfare yesterday, hitting the boards, down by 21% today to $3.52. So tonight we do get the trade balance in Germany and France, and we get a small business optimism index in the United States. Could dip, lots of uncertainties out there as well. Now, speaking of criticisms for the RBA, which Michelle Bullock, the governor, did push back on quite firmly. She said they do get out and speak a lot. She does speak a lot. She does this media conference. She does economics, Senate estimates. And we will be hearing, to her point, from RBA Deputy Governor Andrew Hazard tomorrow. I don't know if you noticed in the press conference, the media conference today, he was sitting at the background with Sarah Hunter, who's also on the RBA. And RBNZ rate decision tomorrow. We didn't even have a chance to talk to Martin about that one. We get inflation out of Canada as well. Boy, Donald Trump is sharpening his claws when it comes to Canada, no doubt. So here you go. There's the COB Australia Index, a flat session. It's mildly negative, but just to reiterate, mildly positive for the S&P ASX 200. It finished at 8,591. Look, there's a lot of content online. I bet you haven't had a chance to watch today. We would encourage you to do so, ausbiz.com.au. Otherwise, we'll see you at 9:45 when we're live tomorrow morning.